Bismillahirrahmanirrahim. Hello, my dear friends and students. In this video, I want to explain the uh, qualitative characteristics of accounting informations. If you remember in the previous videos, we discussed regarding accounting information that at the end, accountant should provide information and that information should be distributed to the users. In this video, we talk about the quality of those informations, that which quality should be available in those informations. If those information does not have these qualities, it means those informations are not useful. So in order to have a useful information from the accountant, and we should be able to make a suitable decision in the future, the accounting information should have the following qualities. What are those qualities? Number one, part one is called fundamental qualitative characteristics. These are the quality of accounting information and these are the must. It means this information should be available in the accounting information. If it is not available, it means that information is useless. Part number two, enhancing qualitative characteristics. These are also to be provided in the accounting informations. These are not the fundamental, but these are the complementary for the first one. It means this is also required, but this part can act as a complementary for the first part or for the fundamental part. Now the question is, which are the fundamental qualitative characteristics? These are the fundamental qualitative characteristics. The relevance characteristics, and of course the fitful representations. And what are the enhancing qualitative characteristics? Number one, comparability. Number two, verifiability, timeliness, and understandability. So all of these sort of quality of information should be available in the accounting information. If it is not available, it means that is useless. Now let us go one by one and to explain each of them. So I am going to start with relevance. I know what is the fundamental. Fundamental once again means those information which are the must, but we cannot miss it. So the first type of fundamental is relevance. Now I'm going to explain the relevance. What do you mean by relevance? Here, information is relevant if it has the following points. It has the ability to influence the economic decision of users. Point number one. So the question is, when we can call an information as a relevance information? We can call the information as a relevance information only if that information has the ability to influence on my economic decisions. Not day-to-day decisions, for example, decision whether to talk with Ahmad or not. It should be able to influence on my economic decisions. Economic decision means monetary decisions, right? So they should have that ability. If it does not have this ability, it means that information is irrelevance. We cannot call it a relevance. And second thing, information is relevant only if it is provided in the proper time for us. If it is not provided on the proper time, so we cannot call it as a relevance information. For example, we needed information today, but you may provide tomorrow. So that information, although it's a proper information, but it is irrelevant. Everything is done, now it is gone. So it may not affect or it cannot affect on my economic decision. The information is relevant if the information has the following value. What are the value? The information should have the predictive value, the information should have the confirmatory value, and the information should have the materiality value. Now let us see each one by one. Number one, predictive value. What is predictive value? We say the financial information has the predictive value if it has value as an input. See the point. If it has a value as an input to predictive process used by the investors to form their own expectation about the future. Predictive value means the accounting information should have that ability or the accounting information should have that value for us and to make us able to expect the future, to make some expectation about the future. If the accounting information does not have this value, or accounting information does not have that ability to make us able to estimate the future, to make some expectation about the future, in this case we can say that that information does not have the predictive value. Are you getting my point? So once again, predictive value means the accounting information has the ability to estimate the future, to forecast the future. So that is one characteristic. Second set, the information should have the confirmatory value. What do you mean by confirmatory value? Confirmatory value means this one. Financial information has confirmatory value if it helps users confirm or correct past evaluation and assessment. This is also very important. Confirmatory value means the accounting information has that ability to correct our past estimation as well as evaluation. It means the accounting information that's to be provided for us, it should make us able to correct our past plans, to correct our past estimations. It means through the accounting information, we should be able to correct our past and we should be able to make a proper decisions for the future. See the point here. So basically, the relevance information make a bridge between the past and between the future. So it should have the ability to correct our past and it should have the ability to make us to have a proper decision in the future as well. So this is called what? Confirmatory value. Point number 3 is materiality. What do you mean by materiality? Information is material if it is omission or misstatement could influence the economic decision of user taken on the basis of the financial statements. See the point here. Materiality means importantness of the information. Materiality means, of course, the usage of the information. The information is called material information only if that information is omitted, or if that information is misstatement, or that information is simply, we can say, deleted from the financial information. So that one definitely could affect my economic decisions in the future. Are you getting my point? So simply we can say materiality means the importantness of the information, whether the information was important for us or not. So that's also relevance information. Once again, information is material if it is omission or misstatement could influence the economic decisions of the users taken on the basis of their financial statement. Once again, so information should not be omitted. Information should not be misstatement in the accounting information. If it is misstated, or if it is, for example, deleted or omitted, it is not recorded in the accounting, and due to the lack of that one, we have taken a decision, and our decision was wrong, so that one can be called as what? As materiality. Next fundamental qualitative characteristic is faithful representation. What do you mean by faithful representation? Faithful representation means that the number and the descriptions match what really existed or happened. Faithful representation simply means what? The informations and the numbers which appear in the book of accounts should be based on the reality. It should not be based on the formality. It should be based on the reality. Anything happened in the past, basically that should appear in the book of accounts. If something else happened, but you have written something else, so in that case, we cannot call it a faithful representation. It means you should be true and honest with the accounting information. Let's take a simple example of General Motors. Let's say, for example, revenue of the company is this much, but we have recorded this much. So in this case, we say there's a wrong information, or we can say it's not a faithful representations of the information. Why is it so? Because so the reality is something else, but we have recorded something else. Now the point is, when we can call information as a faithful representation, Information can be called as a faithful representation only if they have the following characteristics: completeness, neutrality, and of course, free from errors. Now let me explain each one by one. Point number one, completeness. In order to be able to understand the accounting information should have all necessary descriptions and explanations. This is one of the faithful representation. It means the information is a faithful representation only if it is a complete information. It means the all necessary description and explanation is available in the accounting information. If you missed some of the information, it means that information is not complete and it cannot fulfill the faithful representation characteristics. Point number two is neutrality. Neutrality means that a company cannot select information to favor one set of interested parties over the other. It means you may select some sort of information which might be in the favor of Ahmad and may not be in the favor of Mahmoud. If you did like that, it means the neutrality is not applicable in those information. Neutrality is applicable in the information only that you should not favor one interested party over the other interested party. For example, you may have interest to make the owner of the business happy, but you may have information, you may not provide such information in the book of account, which may not be in the interest of the customers, which may not be in the interest of the public, which may not be in the interest of the creditors and so on. So the information which you provide in the book of account, it should be neutral. It should not be in the interest of one party. It should be interest of everyone in the book of account. Last one is free from error. So the accounting information should be free of errors and mistakes. That's very simple. The second quality of accounting information is enhancing quality, as we said before. Number one was fundamental, and that was divided into two parts, relevance and faithful representation. The second quality of accounting information is enhancing quality, and this act, of course, as a complementary for the first part. What are included under this one? It includes comparability, verifiability, timeliness, and understandability. These characteristics distinguish more useful information from less useful information. So as I said before, the enhancing quality of accounting information act as a complementary, and it distinguish between more useful information and less useful information. It doesn't mean that not useful information. Which information is much more useful, which informations are less useful, which one of them should be provided first, and which one of them should be provided second. So this one is under the enhancing quality. Now let us look for each one of them one by one. Number one is comparability. Comparability means the users must be able to. It means the users of accounting information must be able to do two things. Number one, they should be able to compare the accounting information of this company over the period of time. For example, you should be able to compare the accounting information of a company in 2017 with the 2016. It means you should be able to compare the performance of this company with the previous year. Performance of a company in 2016, performance of company in 2017, 19, 20, and so on, right? So these characteristics of information should be available in your accounting information. Otherwise, if the users of accounting information cannot compare your performance with the previous year, it means comparability features of accounting information is not available in your book of account. And number two, the users of accounting information should be able to compare the performance of your organization with other organizations as well. It means not the performance of your organization with the previous year, but the performance of your organization with other organizations in order to find out which organization is the best, whether to invest in your business or whether to invest in some other organizations. In order to have or in order to be able to compare the accounting informations, the accounting information should have the following two characteristics. Number one, the features of consistency should be available there. And the second thing, the features of disclosure should be available. Consistency simply means that if you want to provide the accounting information, always you should provide in the same method. Always you should use the same technique for providing accounting information, right? It doesn't mean that in the first year you use one method for providing accounting information, and in the second year you use the second method to provide accounting information. So if you want to provide accounting information, so always, or at least for a particular number of years, you should use that method. Unless if that method is not useful, then you can change for the other method. Later on, you will see there are several methods. For example, method of valuation of inventory, method of depreciation, and so on. So the business should continuously use the same method of depreciation or istihlak. If that method is not useful anymore, so then you can change to another method. So when you change to another method, there should be a proper disclosure that why you have changed the method of depreciation. So consistency, you should not change. If you change, you provide a note for us. This thing should be available there. One characteristic. Second characteristic is verifiability. Verifiability means, of course, if different people use the same method and finally they find the same result, it means your accounting information is verifiable. For example, you have a bundle of currency. Ahmad counted and finally they find out 100 units. Mahmoud also count, he find out 100 units. It means your data is verifiable. So the accounting information also should be verifiable. Even Ahmad and Mahmoud use different people use the same methods and finally they find the same results, it means your data is verifiable. Verifiability or verifications can be direct verifications or verifications can be indirect verifications. Direct verification means verifying an amount or other representation through direct observations, for example, counting cash. Direct verification means, for example, directly we count the amount or directly we see it, for example. For example, as I said, the bundle of currency. So you calculate or you just count the bundle of currency and you find out that how many unit is. Ahmad count, Ahmad find 100. Mahmoud count, Mahmoud also find 100. So this is called direct verifications. Indirect verification means we apply, for example, different methods and techniques, and again, we find out the same result. That can be called as what? As indirect verifications. Next, quality of accounting information is timeliness. It means the information should be provided in the proper time. If it is not provided in the proper time, definitely it lost its value. It says that generally, the older the information is, the less useful it becomes. As much as the information is old, it is not useful for us. So we need a new information, timeliness. So provide the information, but provide it in the proper time, right? So if you provide late, so what is the use of this? So we should provide in the proper time. And the last one is understandability. So the information should have the understandability features as well. Understandability depends on what? Understandability depends the way in which information is presented and the capacity of the user. Two things. Information is understandable only if it is provided in the proper way. And the second thing, the users has that ability to go for the accounting information or to understand the accounting information. Here we assume that the users have a proper knowledge of the business or economic decisions. If the users of accounting does not have the knowledge of accounting information, definitely they will not understand anything. And the second thing, they should have the willingness to study the accounting information, right? If they are not able, or the second thing, if they are not willing to study the accounting information, definitely they will not understand it. But from our perspective as an accountant, The information should be provided in such a way that it should make able the users of accounting information to understand it properly. The understandability is enhanced when the information is classified, characterized, and presented clearly and concisely. This is very good. Understandability is possible only if we classify the information properly, if we group the information properly, if we clearly and concisely mention it. Unless we classify it, we clearly mention, definitely the users of accounting information may not understand it. So as an accountant, or we can say as a business managers, we should provide the accounting information in such a way that it should be clear, it should be summarized, it should be properly classified, it should be properly grouped, and then we, the users of accounting information, might be able to understand the accounting informations. So for the further information, please do not forget to go for our YouTube channel, Muhibul Zamani, so you will get the rest of informations. So thank you so much. In the next slide, inshallah, we'll discuss about some basics accounting terminology.